the Smart Money Concepts Indicator, which is available for various platforms on the TradingFinder website. From this section, you can download the indicator file for MetaTrader 4 and MetaTrader 5 platforms and run it on your chart. Traders can also read this page to learn about how the indicator works and its functionality. From the Navigator section, go to the Expert Advisors area, select the Smart Money Concepts Indicator, and run it on the chart. After running the indicator, go to the Common tab, and in this tab, enable the options Allow DLL imports along with Allow import of external experts. Go to the Inputs tab, and in this tab, you need to enter your own dedicated license. To get your dedicated license, visit the TradingFinder website and contact support to receive your personal license for this indicator, then enter it here. Just make sure to note that the license you receive is only valid for that specific device and won't work on other devices. In this same tab, you can also enable or disable the alert sound status. In the first input, you have the option to enable or disable the alert sound as a pop-up, which you can turn on or off to have it displayed on the alerts page. In the next input, you can enable or disable sending alerts as notifications to your mobile device. And in the last input, you can enable or disable sending alerts to your mailbox. If this option is set to true, we go to the Tools tab. You need to have completed the options and settings related to email in the Options section, and after that, click the Confirm button. When the indicator is run on the chart, it starts displaying a panel to show various smart money style statuses on the price chart. Smart money traders can easily use this indicator to analyze market structure, order flow and liquidity, the behavior of financial institutions, hedge funds, and central banks, and identify suitable entry and exit points for trades. By clicking on the top of the panel, we can move the indicator panel around the chart and place it wherever we want, and by clicking on the Minimize option, we can reduce the indicator to its minimum size. And in this section, it only displays the remaining time until the current candle closes. And by clicking the Minimize option again, the indicator returns to its default display, and we can enable or disable different modes in this section. The first option in the indicator is the ZigZag mode, which, when activated, makes the indicator start displaying zigzag lines on the price chart. Smart money traders can use this feature to filter out market noise and minor movements, allowing them to focus mainly on the market's major moves. Also, by using this indicator and the zigzag section, we can identify price highs and lows, as well as swing highs and lows, and the points where the zigzag changes direction can be used as support or resistance levels. Technical analysis traders can also use zigzag lines to identify classic and harmonic patterns, and Elliott wave traders can use this section as a counting tool. The next mode is the order block status. By enabling this option, the indicator starts to identify and display valid zones where institutions and smart money have placed a large number of orders, causing the main movement in the market. This option allows us to have zones identified where, when the price reaches these areas, we can observe price reactions and, based on these points, perform more specialized analyses and enter buy or sell trades in the market. For example, here the indicator has identified this candle as a bullish order block. We can see that the price moved upward, and after pulling back downward, it tried 4 times to break this zone to the downside but failed. Ultimately, it was rejected upward, and after pulling back to the bullish order block zone, we see that the price moved sharply and strongly upward. Also, in this section, a bearish order block has been identified. After the price moved and corrected downward, there was a pullback to the order block zone. Following the reaction to the order block, it failed to break through the zone, and after that, it entered a downtrend. We could have taken advantage of this opportunity to enter a sell trade in the market. The next option is related to the breaker block. By enabling this option, the indicator starts displaying the broken blocks, with its main focus on the breaking of order blocks. When order blocks are broken, they turn into new zones for price reversal, which we call breaker block zones. For example, in this section, a bearish order block was identified, and as the price moved and broke above it, the order block became invalid and lost its significance, changing from an order block to a breaker block. By enabling this option, we can observe these zones as they change their nature, shifting from resistance zones to support and from support to resistance. Here, this bearish order block acted as a resistance zone, but as the price moved upward, this bearish order block was broken and turned into a bullish breaker block, which is marked in green. Here as well, a bullish order block had been identified, but as the price moved upward and this bullish order block was broken to the downside, with the candle closing below the order block zone, this area turned into a breaker block and is shown in red. Its nature changed from support to resistance, and as we can see here, when the price pulled back to this area, there was a reaction and the price moved downward. Again, here there was a bullish order block zone, and after the bullish order block zone was broken, it turned into a bearish breaker block zone and acted as resistance here. The next option is the FVG or fair value gap zone. By enabling this option, the indicator starts identifying FVG zones on the price chart. FVG zones are areas of imbalance in the market between buyers and sellers, and we can use these zones as support and resistance levels. FVG zones are considered a candlestick pattern that occurs when buying or selling pressure increases, creating a gap between the first and third candles. This area and gap are known as the FVG, and price usually tends to return to this FVG zone, bringing it back into balance, and after reacting to these zones, it continues its trend. For example, here a small bullish FVG zone was formed, and when the price returned to this zone, it balanced it out and a reaction to the upside occurred. In this section as well, a bearish FVG zone has formed, which is marked in red, and when the price pulled back to this zone, it failed to break through it and only consumed the FVG zone before continuing its movement. The next section is about IFVG, or Invert Fair Value Gap, and by enabling this option, the indicator starts displaying the broken FVG zones. These zones are formed due to price pressure and volatility, and after the FVG zones are broken, they turn into IFVG zones, which change their nature from support to resistance and from resistance to support. Here, a bullish FVG zone had formed. As the price moves downward, it plays its role and acts as support here, pushing the price upward. However, the price failed to break the price ceiling, moved downward, and here the candle causes the FVG zone to be broken and turn into an IFVG zone. With the price pulling back to this zone, we see that the price continued its movement downward. And here as well, a bearish FVG zone had formed, which, after being broken, turned into a bullish IFVG zone. When the price reached this zone, we saw a rejection occur, pushing the price upward. In this section, the bullish IFVG zones are shown in red and the bearish IFVG zones are shown in green. If you have this option enabled, we can examine these zones with greater precision. The next option is related to BPR, or balance price range. By enabling this option, the indicator starts to identify and display the equilibrium price zones, showing them on the chart. BPR zones are formed from the intersection of two opposing FVG zones and are displayed on the chart. Here, a bullish FVG zone was formed as the price moved upward and then retraced. In this section, another FVG zone is formed, which is the intersection between the bullish FVG and the bearish FVG. This intersection creates a bearish BPR zone, which is marked here in red. Or in another part, here, a bearish FVG zone was formed, and as the price moved upward, a bullish FVG zone was also created here. The overlap of the bearish and bullish FVG zones forms a bullish BPR zone, and after that, we can see that the price reacts to this zone. We can use these zones as a good opportunity to enter a trade. Additionally, it is worth noting that on certain occasions, three distinct zones can be observed forming within the market structure. For instance, in this particular example, a clearly identifiable and significant bullish fair value gap, often referred to as an FVG zone, was precisely created, indicating a potential area of interest for traders. In this section, a bearish FVG zone was formed, and in this part, a bearish BPR was created. But when the price returns upward again, another bullish FVG forms in this same zone, which is considered as three BPR zones. This area is a strong zone for price reaction, and we can use this zone. The colors of these zones are indicated for us in this section. For zones that include three FVG areas, the middle zone is displayed as a blue area. The first zone that formed is shown in its own color. In this case, it was a bearish BPR zone. Then, the price moved upward here, and finally, it turned into a bullish BPR, as we can see the zone has been drawn for us. The next zone. The entire zone area is displayed, and by enabling this option, it starts to show the key time intervals in financial markets where the highest volatility and trading volume occur. By enabling this section, the three key zones are displayed: the Asian kill zone in purple, the London kill zone in blue, and finally the New York kill zone in pink. The time intervals for these zones are also determined based on New York time, with the Asian kill zone running from 7 p.m. to 10 p.m. New York time. The London kill zone is from 2 a.m. to 5 a.m. New York time, and finally, the New York kill zone is drawn for us from 7 a.m. to 10 a.m. New York time. Based on these zones, we can develop our own trading strategies and enter buy or sell trades in the market. The last option is related to market structure. By enabling this option, the indicator starts to identify and display the market structure. With this section, we can identify the market trend, detect break of structures, recognize inducements, and examine liquidity zones and change of character in the market. When the indicator draws a level for us, for example, here it displays the CHO or change of character level, and if this level is broken to the upside, the price trend shifts from bearish to bullish and enters a long-term trend in this section, as we can see that the price has moved upward after that. Also, in areas where the LQDT, or liquidity level, is clearly displayed, we can reasonably expect that the price will actively collect available liquidity in these specific zones and then subsequently move in the completely opposite direction, effectively sweeping existing liquidity and triggering stop losses before ultimately entering the primary, dominant trend in the overall market. If we are in an uptrend, the inducement or liquidity provision level is located at the lower part of the column, and the liquidity or liquidity collection level is at the top, where we can see that a bullish change of character has occurred. Liquidity was collected here, and after that, the price made a sharp move upward. Or in this section, liquidity has been collected in order to move downward and gather the inducement liquidity, entering the main trend in the market. As we can see here, a bearish change of character level is also shown, and if the price breaks this level to the downside, the market will enter a downtrend. But if it breaks the BOS or break of structure level, it will continue its upward trend. At the bottom, there is a settings option where we can enable or disable various states. By default, the indicator starts to analyze and display 1,000 candles in the market. This means that from the last candle or the current candle, it moves back 1,000 candles, and here we can see that it marks it for us with a red vertical line. It starts analyzing the market trend from the 1,000th candle, and after that, it displays various states for us, which we can adjust here to increase or decrease the amount. Here, I enter the number 100, and it goes back 100 candles from the current candle. It displays the vertical line and starts analyzing the market trend from the 100th candle, which we can see among these 100 candles. 2 bullish order block zones and 3 bearish order block zones have been identified. In the next option, we can enable the last block status, and by activating this option, the indicator will start to analyze and display the last 3 bullish zones and the last 3 bearish zones on the chart. If the zones are valid, have not been broken, and have been identified on the chart, it will display the last 3 zones. Otherwise, in some cases, it might only display 2 zones, 1 zone, or not display any zones at all. As we can see here, it has identified and displayed the last 3 bearish zones and the last 3 bullish zones. In the next option, you can also enable the untested feature, which, when activated, will make the indicator display only those zones that are fresh and have not yet been touched by the price. And as we can see here, all the zones are marked as fresh zones, and if the price reaches these zones, there is a possibility of a strong reaction in them. We can use these situations as good trading opportunities. And the last mode is called void. If we activate this option, the indicator starts to analyze different zones, and if the price has already consumed those zones, it shows us the amount that has been consumed. For example, here an upward order block was formed, and as the price moved downward, we can see that a large portion of this order block zone was consumed. The consumed portion is shown in grey, and the part that hasn't been consumed yet is displayed in green or in the color of the zone. Also, when the entire zone is consumed, the indicator displays the whole area in grey. We can see that as the candle moves downward, it has consumed the entire order block zone, collected its liquidity, and closed above this order block zone. Here, there's another example where we can see that part of the bullish order block zone has been consumed, while the rest of the zone still remains. If the price manages to break through the zones either to the downside or upside, those zones are considered invalid and are removed from the chart. If we have a bullish zone and the price closes below that zone, the bullish zone becomes invalid. Similarly, if we have a bearish zone and the price breaks above it, the bearish zone becomes invalid. These scenarios I mentioned apply to all different cases. Whether it's an order block, breaker block, FVG, IFVG, or BPR. We can enable or disable all of these scenarios here, and based on them, the breakouts that form will cause the price to start checking and displaying valid zones on the chart. Also, if the price action reaches a significant bullish or bearish zone for the very first time and then subsequently mitigates that particular zone for the first time, an important alert will be promptly issued for us. We could then precisely set the alert settings at the exact moment when we wanted to effectively run the indicator. And also, if a zone becomes invalid, an alert will be issued for us, so we can be informed when a zone becomes invalid or when the price touches the zones. These situations apply to order block, breaker block, FVG, and IFVG, and alerts are issued for these cases, except for the BPR case. Well, friends, we've reached the end of this indicator tutorial. We'd be happy if you share your comments and suggestions with us in the comments section.